Hey guys, good morning. Good morning, good morning, good morning. If you guys can hear me and you can see my screen, please type in a double Y. I had myself muted, so I was talking for a little while and nobody was responding, so I just
I can hear
unmuted.
you.
You can hear me now? Okay, great. Excellent. Thank you. All right, great. All right, thanks guys. Thanks. Okay. So, hey guys, welcome to the meetup for the month of August. Wow, we are already past halfway of the year. What a year it has been in this market. Today, I'm just going to jump right into it. We have two presenters, myself and Dave. Dave is going to do the first half of this presentation. And basically, he's going to be sharing with you some trades, two trades, so options trades. Obviously, we're an options group, so he's going to talk about that. And then after he's done, and for those who still stick around, I would talk about my presentation, which has to do with this right here, catching big trends after the Fed announcement with some powerful candlestick signals. And so, if you're interested in learning about that, then I encourage you to stay after Dave's presentation to hear what I have to share with you in regards to how you can catch some big trends after this Fed announcement has taken place. Okay. But like I said, to start off, we would do the first 30 minutes with Dave and kind of see what he has to share with us as far as some options trades are concerned. And then we'll go from there. Dave, are you ready?
Sure. Sorry
Uh,
about that. It was,
all right. So let me go ahead and switch things over to Dave. 30 minutes is good enough for you, right, Dave?
I'll try to hurry and keep it within that window.
All
Yeah,
right.
two trades. But
That sounds good.
maybe if there's questions, we'll see. But
That would be much, much, much appreciated. So again, guys, I'm gonna start off with Dave. I know that there are people just logging in and stuff like that, so we'll probably still have some more people logging in and everything. And I'm also recording this. Some people have been asking in the past, "Where's the recording? Where's the recording?" So I'm recording this time, and I'll send this out to people to see if they want to see the recording on this as well. Okay. But please stay online. I don't want it to be the reason why we don't record, just so you guys know, is because everybody's like, oh, I don't need to attend. I'll just, watch the recording, and then it has a low attendance and stuff like that. So we're trying to make sure that we have good attendance. Part of that is so that way people who have questions can ask the questions, which helps everybody overall. Okay. But I'll send out the recording on this one, just to see how this goes, and then we'll take it month by month and see how that goes. So, anyways, long story short, I'm going to turn it over to Dave. Dave is going to do the first 30 minutes talking about some options trade, and I'm going to talk about, for those of you guys who just logged in, again, I'm going to talk about how to catch big trends after the Fed announcement with a powerful candlestick signal. Okay. All right, so let me go ahead and turn this over to Dave now. Let's see, Dave, you should be seeing something that says that you are being made the presenter. All you have to do is accept that and then go from there. And I think we can see your screen right now, Dave. It says have a great session. That's the screen that we see. There you go. Now we see a Thinkorswim chart. Now we can't hear you well, Dave, though, just so you know.
I'm mumbling while I'm trying to minimize all the go to meeting kind of things that are in my way.
All right, so just so you know, we don't see any of that. The only thing that we see
I
is the Thinkorswim
know,
chart.
but it or and we want to get rid of these guys here. Can you hear me?
Yes, we can hear you.
Okay, so what I'm going to share today are a couple of trading the news trades. And this first one here is post earnings. So what I have shown here is Texas Instruments. Texas Instruments earnings was Thursday, right? Thursday or Wednesday night. So Thursday was the first day after earnings, and Friday was the last day of the week here. So here's playing the news here. Okay, so what is Texas Instruments? Well, they make chips, right? One of the semiconductors. Right? I follow semiconductors pretty closely. So I'm pretty aware of what most of the companies in that space are doing. And if you've been hearing for, I don't know, last year, we've had this chips shortage, right? So the chips guys have all been pretty much reporting pretty well. But for the last quarter and a half, the analysts have come out and started beating down that whole sector, saying, "Oh, we're going to have a glut now because all this pent-up demand. They're going to create all sorts of semiconductors. Then there's going to be big inventories. They're going to have to reduce their prices." So they're all saying that this is almost to a T. All of the analysts are on this bandwagon that, well, there's going to be a glut, so we're taking down a lot of the multiples on the semiconductors. Well, the reason we got into this space originally was because the car companies back in 2020 all canceled their orders when everybody was assigned to staying home to stay away from the virus, from the pandemic. So all the car companies canceled their orders. They shut down their operations. So, well, we're not going to build anything. We're not going to buy any chips. And then in 2020, toward the end, we got this reopening kind of thing. We got vaccines coming out, and then everybody was going to start reopening. And then there was no chips to be had because they were all bought up by cell phone guys, laptop guys during the pandemic. That was the big rush during the pandemic. So all the car companies were struggling with no product they could sell because they couldn't finish it. They didn't have the electronics to get the cars out of the showroom. So that was a big issue, right? Big issue. But that got us to where we were last Thursday before earnings. Well, Texas Instruments came out and they beat earnings. They substantially. So they had an earnings beat. This is the earnings right here. This is after market when earnings came out. This is the candle that we were seeing. Here's the next day after earnings. Okay, the big green candle here says, "Oh, okay, great." Then there was some news that came out on Thursday. This is Thursday. What was the news? Well, the CHIPS Act finally passed. It's been bantered about. You've been hearing about that. Well, we've got to build semiconductors onshore because what happens if China takes over Taiwan? That's where 100%.
Hey, Dave, real quick question, Dave. You were pointing to Thursday. I didn't see your mouse move. Can you move your mouse to see if everybody else is able to see it? Because I don't see it. Or if anybody else sees what he's pointing to, please chat that.
You can't see my cursor move? All right. Okay. If you can't see my cursor move, I have a little arrow, white arrow.
Okay. Yeah, we see the white arrow. Okay.
Okay. I'm so disappointed you can't see my cursor move because I used that to highlight. But okay. Anyway, the cursor right here, and you see, right, it's the close of Thursday. So we've seen in Thursday, there's 1, 2, 3, 4, 5, 6. They're all green candles on Thursday. That's the day after earnings was out. The day after. So that's the news. That's the CHIPS Act news looking at you right in the face. It's a continuous grind higher. So I can't cover this up, but if you fix your eyes on the arrow, it says, did you see the pop-up that says arrow named arrow 9? Wally, can you give me feedback on that?
Yeah, I don't see anything. Is anybody else able to see things? Because maybe it's just my screen, but it seems like all I see is your frozen picture.
It's probably a function that I have live access to Thinkorswim, but you can only see the picture of it. Anyway, look at the arrow because everything else I think you can see. The arrow is right where the price action was when I decided to do something. So what was I going to do? I was thinking, well, the next day, I think this CHIPS Act news is going to stick one more day. So I was focusing on the next strike up. These are the strikes available: 172.5, 175, 177.5, 180, 182. 2.5. So these are the strikes available. 1 day to go, 1 day to go. So how do you put a bullish trade on? And where do you focus on? Well, I was focusing on the next strike. It was 177, 175.25 is where the arrow is. I said, okay, I'm gonna target this 177.5 strike. The next strike up. It's almost a whole strike away, but just one strike up. So how do you do that? Well, you can sell a straddle, right? Sell a call and sell a put at that strike. So, okay, well, that leaves a lot of room for, let's say, to be undefined risk in there. So, okay, what else could we do? Well, we could sell a call spread outside of that strike, right? That's what this was. So I says, well, okay, I want to sell the 180, 182 strike call spread. So I'm going to be short. I want to sell short that call spread. And I want to sell a put spread short. Well, the put spread I want to sell short if I'm targeting 177, that's the short strike. So I sold that. I bought the 175 put so that I could define that trade to a $2.50 wide window. Everybody get that? And it's an in the money put spread. So there's mostly intrinsic value on that. So what I'd be hoping for, if that piece of the trade worked out, that I would get above 177.5, and then all of the money I took in for the put spread would expire worthless, and I'd save the credit, right? That's a little different in the money put spread for credit. This is a call spread also for a credit, but it's out of the money. So there's three vertical spreads involved in this trade. The call spread that I sold was $2.50 wide. The put spread I sold was $2.50 wide. So what's the most I can lose on that? On either one or both of them? Only $2.50. That's all I can lose, minus what I take in. So I went and I looked at, say, well, what can I sell the put spread for all alone? And when I looked that up back on Thursday, I could sell it for $2.02 credit, just for the put spread, just for the put spread. So I sold that. So that was, I'm constructing my combination trade here. Sold the put spread for $2.50. Sorry, for $2.02, and at worst, it would be I could lose this $2.50. Then I go to the call side and say, okay, now I want to do a condor here, which is all calls. So I'm going to buy a call spread. So I bought a strike in the money. Here's where we were trading. I bought the 172.5 call. I sold the 177.5 call. So that's now a $5 wide call spread. And so that was part of the combination. Oops, no, I screwed that up. Let's see, how am I going to go back here? Okay, sorry about that. I hope you're following along and not screwing up with mine. All right, so sold the $2 wide, $2.50 wide call spread about out of the money. Sold, buying a debit spread, $5 wide, and that combination, I did that is all in one trade. Bought this call spread from 172.5 to 177.5. I bought that, and I sold the 180 and 182. That combination, that's called by the way, that's called a call condor when you're using all calls to create a combination spread there. So that condor cost me $2.44. But the put spread I sold, I collected $2.02 credit. So The whole package cost me a grand total of 42 cents, $42. And the risk was only $2.50 wide. Well, actually, once I paid for the combination, that's all I could lose is the 46 cents. All right, 42 cents. So what happens? What are the outcomes here? There's a lot of possible outcomes. I have three short options in here. I sold a put at 177. I sold a call at, oops, I missed the call, at 182.5, or 180, sorry. And okay, so what does the risk profile for this look like? I think I have it in the background here, so let me see if I can go to that. Let's see here. Hang with me. I want to go to that. I want to go hide this. See if I can move this and hide this. There we go. And screenshot here. All right. Now, Wally, can you tell me, can you see a risk profile here?
No, I can't. I still see the same screen.
Oh, do you?
Yeah.
Hang on. Oh,
it's almost as if your screen is frozen, so I don't know what's going on.
Let's see. What do you see now, right now?
All I see is your Texas Instrument chart, the same one that you had when you first started.
Okay. How do I show this one? Well, this is I thought you would be able to see this. Control. I want to share this one, but let's see, maybe I can.
Maybe what I can do is let me take control back and then give it back to you again and see whether that works. I don't know if that will work or not.
All right, try that.
All right, give me a second.
It'll be kludgy halfway through, so this will be.
Okay, so right now I should have control again, and then I'm going to turn it back over to you one more time, and maybe this time we can have you do this better. Let's see. I'm going to make a presenter again. You should see something pop up. Okay, so now we see a different screen now, and we can see your mouse moving now.
Yeah, that's.
All right, so we see your desktop.
Yeah, it's getting there. Okay.
And now we see the
risk profile
chart.
All right, I'm going to have to speed up here because, okay, so anyway, what you see here is the combination of those three options. And what you'll notice is one of the interesting points the talking points here is this flat spot here. This is created by the, if I could switch back and forth, it'd be a whole lot easier to talk to, but if all three options, actually, if the two short verticals both expired out of the money and the long call vertical expired both in the money, then there would be no trade management required. The two short spreads would fall out, expire worthless, and the long spread that was $5 wide would be both in the money and would net out to $5, which is exactly what happened. What happened here? This is, if anybody's ever tried to trade out of a butterfly, an iron butterfly, or a calendar trade where you have two strikes that are, a short call and a short put strike, and at the same strike, and you're near that strike, it's almost impossible to trade out. the market makers really hold you over a barrel, even to the very last minute, especially on a stock that can move a lot. So if you construct a trade like I just did, it gets you a little bit of a flat spot where if you get close, you don't have to do any trade management and everything just nets out, in this case, to the best possible situation. So let's see if I can go back. If I go back to Thinkorswim, maybe you won't see this, maybe you will. Are you still seeing my risk profile? Or did we go back to the Thinkorswim chart?
Now you're back on the Thinkorswim chart.
Okay. Sorry, I don't know why that didn't work, but okay. So that's exactly what happened. This is the flat spot between here, between the 177.5. That's where the both long call and the short call were in the money. The short call above is out of the money. The short put below is all out of the money. And we're in between 177 and 180. That's the flat spot that we created with this structure. So if you can sort of remember to see how we did that, that's a good way. So this is one strike, only one strike difference. And what was the net financial picture for this? Well, for 42 cents of risk of the whole trade.
Dave, your audio is not clicking in well. It's going in and out. So just so you're aware.
All right, I was turning my head to look at my notes. Sorry. So I had to look right at my screen for the audio to work great. All right, so I collected all of the $5 for the call spread, and I saved the entire $2.02 from the put spread that I sold. So for 46-cent risk, I collected $7 in this trade, and it was a one-day trade, and it only moved one strike. Interesting, huh? So that's how you can do. There's 3 different bull verticals in this package. So 3 different ways to make a bullish trade. I combined my risk to 42 cents and I pocketed $7. So $7 against 42 cents risk, I think is pretty good. So anyway, that's trading the news. That's trading the news. There's another, I want to share another trade the news. Let's go to in phase here. Well, you might look at in phase. Let's go to, try to hurry up here. This is a covered call strategy. And I want to at least do the setup for you here. So Enphase, what does Enphase do? Well, they make inverters. They make inverters for solar panels. It's like one inverter for every solar panel. But they don't make the solar panels. And China's not making inverters. They're not selling, they're making solar panels, but they're not doing this part. Along with the inverter comes a lot of software that helps manage the control of the solar installation to the local grid or to itself, so that you can monitor your own rooftop solar if you put that on there. So here's the picture. Here's where notice this. I do this. The dashed lines were my version of support resistance kind of thing, and this is a trend line that I put on for the marking the lows here. Why did I look at this particular sign? 220. I hope you can see that over here to the right. 220. That seems to be a point of resistance that the stock has gotten to 2 or 3 times in the last 3 or 4. So going back to here, this is when I decided I have been holding Enphase for quite a while myself. So here is a little run up, and I thought, well, maybe it's time to just get out of this stock. Up until just recently, all the green energy stocks have been under pressure because Joe Manchin has torpedoed all of the green energy legislation. until recently. We'll talk about that in a second. So I thought, well, all right, I'm going to try and maybe close out of this at 220. I've had a pretty good run with this stock, and I thought, okay, well, when the stock was right here at this arrow, I hope you can see that back on 530-ish, that's when I decided to sell a covered call. Well, I targeted this resistance point because I didn't think it would jump too much after this. I thought, well, maybe we'll get to here. So I sold a covered call, 220 covered call for about 2 weeks. The white lines are the length of the trade. The actual position of the line is the strike that I sold. So this was trading about 190 and I sold the 220, so that's $40 away, and I still collected $1 for about 2 weeks or so. So it kind of got up there, but it didn't get there, and so I saved my covered call, and I was ready to sell it again. Well, stock kind of dipped down again, and I waited for another run up. So on 623, I did the same thing. Well, I used the same target for my short covered call, willing to give up my stock at 220 because I thought that was maybe where it was going to end up being. Collected another $1.59, a little bit more. You can see I'm a little closer at this arrow to the strike than I was in the first time. So I collected a little more premium. Well, 2 weeks passed and that sold off again toward the end. So it expired worthless, and I was then waiting again to see if it would come up there. So it did. It came back up on July the 8th, right near this one. And so I said, well, and I looked to see what the 220 strike was going to fetch me, and I thought it was a lot, but I thought, well, I'll go one more strike out. What's that get to me? That would give me a little bit of, let's say, an upward buffer between my target, where the resistance was, and if it was going to break out. I didn't think it would break out too much, but I could sell that one for $4.20. So that's what I did, and that was like about a 7-day trade. So I'm selling covered calls along the way here, collecting premium, and it's not reaching my target. Then what happened? Then we get closer to earnings day, when implied volatility usually is a lot higher. But there's been, well, okay, anyway, in phase, if we, I'm going to go back here, back out of this and go to, let's see. I'm going to go back and show you some earnings. Last earnings was 42 cents, estimate 79 cents actual, so I was beat by twice. Go back to the earnings before, it was also estimate was 29 and it was 70. So M-Phase has been beating all along, but they haven't raised the target price much. As a matter of fact, they lowered the estimates. Anyway, I thought, well, for sure they're gonna have a beat here. So I didn't want to go ahead and sell a covered call right before earnings. I thought, well, we'll wait to see what happens. We'll wait to see earnings, what happens when earnings come out. And voila, you know, they had a whopping beat on earnings. 53 cents. So the financial analysts raised their targets a whole like 10 cents or something, and they beat them almost $1, 50 cents higher. So this was the earnings beat. Okay, I say, okay, earnings beat. Interesting. Well, just so happens, and I'm running into my time here, that there was the Joe Manchin pivot came out on this day. This was the earnings beat, but the Joe Manchin pivot came out. The news came out this day, and this is right about when I was watching news at this arrow here, and the arrow is 252-ish. So that's when I said, well, I'll sell a covered call now. money. So I sold one for 2 weeks out here, and I collected, it's hard to see here. Let's see if I can go a little farther out this way. So I made this trade, you can see out to the dash line. So I sold the 270 covered call out to 8.5 and collected $4.30, $4.20 it looks like behind here. And the very next day, wow, it popped again, and the stock now is out of the money. So this is Friday. This is Friday right here. So for one, I'm in this trade for only 1 day, and I thought, well, what am I going to do now? Well, I could just wait and get called away if the stock stays above 270. My shares will get called away. This is, well, what else could I do? I could roll out and up and collect some, or I could just roll out. I chose to just roll out, and I did that for a reason here. I bought this back after just 2 days of collecting $4 and looks like 20 cents here. I rolled it out another week, so I bought this back. The dash line means I bought back all that time. Then I sold it out for even more time and collected another $3.18. So what are the possible outcomes here? Well, if the stock stays higher, I'm going to lose. I get called away at 270 here, out at August the 12th. That's when this trade ends. So you go back here. But look here. If I drive another trend line from this high here, back over here, what does that look like? Let's make this something we can see here. Let's do a dash line again. White dash line. So now I see this old resistance here as now being, maybe it's because this looks like a breakout, right? What happens when there's a breakout? Like on a lot of good news, sometimes you get a pullback. So that's what I'm going to watch this trade for. I'm thinking maybe it'll start to pull back. Today it's up just a little bit. This is today's candle here. This is my Friday roll was right here. So all in all, I've collected on all of those covered calls, I've collected $1,433. Still have my stock, mind you, and it was covered calls. So what's the talking point here? What kind of candidates do you look for covered calls? Well, you look for covered calls that have, say, go back to, oops. Let me zoom out here. Look at this implied volatility study at the bottom. This stock has an implied volatility that's runs from anywhere from like 60, 70% to like almost 100%, a lot, sometimes over 100%. So this is a stock that moves. So if you have shares of a stock that moves around a lot, look for big green candles. And when you see a big green candle, that might be a good time to sell a covered call. There's still a lot of implied volatility. There's a lot of implied volatility left in this stock Friday because options were still closing on Friday. So on Friday, when I was still rolling, there was plenty of open interest for me to sell into. Now I didn't have time to go back and show you that because I'm out of. It's always turn here. So anyway, those are the two different style calls that played the news. And Wally, if you can show me a candlestick out here anywhere that predicted this price action that was a result of the news, I'll be hard pressed to say. So I trade the news. Wally trades the candlesticks. Anyway, I'll turn it back over to you, Wally. Does anybody have any quick questions? I mean, Wally needs some time to show.
Yeah, does anybody have any questions before I take over? Going once, going twice. All right. Okay, so let me do this. Let me see if I can switch this over.